right, rolling. Hey, another week shooting the Agent Boost podcast. It's been a few weeks. We've both been traveling, both myself and Mike. So we're both back in pocket this week, and excited to have a guest on. Rick, I'll go ahead and let you introduce yourself, man. Kick us off.
Well, I'm Rick Lindsey. I was born and raised in Salt Lake, and thought I was going to be a professional hockey player. And I played all sports growing up. My dad he started Utah Youth Soccer and just did a lot of stuff for youth sports. So then in 79, I got cut from the Olympic hockey team that went on to beat the Russians, and I was pretty much screwed because I didn't give a crap about school. I graduated, but not with anything that you'd be proud of. So I just went to work in my dad's MGA. You know, we had Lloyd's of London and Carolina Casualty and Canal for trucks, and then we would do all kinds of weird stuff. When I was 12, my dad insured Evel Knievel's jump of the Snake Canyon.
Oh, wow.
So I was there, and I mean, you know, when you grow up in a business like that, you don't think you're learning stuff, but you learn a lot of stuff.
Yeah, right? It's in your blood.
I remember they made him put up 2 fences because the canyon wall was right there, and when Evel Knievel went over, I mean, I think he made it, and then the chute came out too early, and he drifted back against the close wall, and so everybody just mowed the fences down, and yeah, that was the biggest risk, somebody falling off the cliff or something. But there were 2 claims from that. One from the outhouse company because all the dirt, all the Harley guys, bikers, bad guys, they piled them up, started bonfires, and they were jumping them. And then there was a girl that got pregnant that night, and she sued, blaming the event that she got pregnant.
As a result of it, huh?
Yeah.
So needless to say, I mean, insurance is in your blood.
Right.
You grew up that way, and you're being modest and saying, Rick, you're the owner of and the founder really of X Insurance, right?
Yeah. I mean, X Insurance is a broker nationwide. In 1985, there was an insurance crisis. If you go back and look at the New York Times, Wall Street Journal, a lot of people couldn't get insurance. They were out of business, and I specialized in anybody that had a government permit. And the federal law, known as the Risk Retention Act, was passed, and I remember I was trying to provide outfitters in Wyoming coverage, and the commissioner up there said, if you come to this state, I will arrest you. They wanted you to force business to the local agent and then come to me.
Right.
Which, to me, again, that's not efficient. It's old school, and everything needs to be updated and kind of evolve. So anyway, we did that nationwide. When they passed the federal law, it knocked down state lines, and I could sell in all 50 states under an association that's formed under the Federal Act. The Federal Act allows you to form a risk retention purchasing group where you buy a group policy just like you would group life and health.
Sure.
Right? It's a master policy, and you join it. Or you form a risk retention group, which is like an insurance company. The industry puts up money, like the feed industry put up they make horse feed and Purina, and they all formed their own insurance company. And then after the market got soft, they didn't need it anymore, and so they were trying to sell it. And that was one of the first attempts of me getting an insurance company. Because as an agent or broker, underwriter, whatever you wanted to call me, for that 10 years doing the hard-to-place group classes, I wanted an insurance company because I'd have to call up an underwriter,
right,
and talk to them.
You talk sense into them?
Yeah, that's, they have a box, right?
Right.
Mm-hmm. In most cases, people are forcing shit in the box.
Yep.
Right?
Yeah.
If you got a dog, they decline you for your homeowners. Next time you don't tell it, you have a dog? No.
Right.
Mm-hmm. And then you get a quote, right? And that's what most people want is a cheap quote. So anyway, I wasted all my time talking to underwriters, arguing with them, whatever. And then on the claim side, they settle everything, right?
Yep.
All of this is liability. That's why there was an insurance crisis and the federal law was passed. and it's hard to pass a federal law. The Risk Retention Act, it's serious. There's still a lot of risk retention purchasing groups and risk retention groups operating, which are kind of like a captive. People wouldn't do that if they could get good insurance, right? You form a captive, you form a risk retention group because you're like a leper. I call them the land of the misfit
pariahs.
toys.
Yeah.
Like California homeowners now.
Right.
Now they're like unattractive, right?
Yep.
They were the prettiest girl at the dance, and now it's like,
Yeah.
you guys suck.
Yep.
Florida's been going through it forever. So
Yeah, before we get into that, all Rick, and I'll I want your opinion and expertise on a lot of that too. But for the benefit of people listening or hearing the podcast, explain a little bit more about really X Insurance, and you've kind of alluded to some of the things that you do. But when I think of X Insurance, you guys will underwrite and insure just about anything, right? Anything from events. We were talking about one before we started recording. If somebody wants to organize a color run or something like that, you guys probably would insure it. If you guys did a concert, big one you were telling
What's
about.
the movie where the guy his whole thing is to try to insure? He's like a actuarial and he's trying to insure the high risk CEO. Remember what movie that is? We'll have to find that.
They want to take the company public, and if he wants to remain the CEO of a publicly held company, guess what he needs?
Life insurance.
Bingo was his name. There's just one catch. This Van Loo has a reputation as a cowboy. Apparently, he's one of these extreme sports nuts.
But that's what it reminds me of, the high risk CEO that loves like base jumping and all that stuff, and no one will insure him for the merger.
Yeah,
that's what you guys do.
Yeah, key man. So
we did Will Smith's bungee jump out of a helicopter on his 50th birthday. He wanted his content and had to get a government permit. And I've insured Al Sharpton's march in D.C. on Martin Luther King Day during COVID. And as I told you earlier, we did the Rolling Stones concert, which, if you go back in time, and I'm going to start my own insurance company, which in 94 I took over an existing company that was going broke. It was started with $20 million. They'd lost 18, and so at that point, I'm a crappy little insurance company with not a very good track record, but I had a good book of business I could put in it, and I started writing homeowners and mobile homes in Louisiana,
high risk
Mississippi.
zones. Yeah.
Well, and Katrina came and kicked everybody's ass, so I learned to survive those things, and that's why I do everything the way I do, because you can't do stuff the way that you used to, right? Everything evolves. NASA got their ass kicked by Elon Musk, right? Landing stuff upside down on cradles and on ships and stuff. So the insurance business, to me, has not evolved. If you look at Lloyd's of London, which is, who I originally, when I formed Evolution Insurance Brokers, which is my brokerage nationwide, it's a surplus lines broker. I filed taxes for risk retention purchasing groups since 1985. So, I was known kind of as that underwriter claims manager. The first case that proved to me that this, you need to maybe push people to do more was a guy fell out of a raft in California and drowned. And everybody said release forms are no good, which Park and I were just on a podcast with the motocross tracks, and that's what they're being told again, right? So here we are 40 years later,
Right.
and it's cycling again where lawyers and insurance companies are saying release forms aren't good. And that's,
Even though you're signing that release and of all liability, full indemnification.
Why are they saying that? What's changed?
well, because they've settled a bunch of lawsuits.
Right. Because even though they're frivolous, it's just the litigious.
They have no interest, right? It's like California homeowners. When the going gets tough, they run for the hills. Right. And, if you're in that business, and that's, when I write rafting guides, helicopter ski guides, I'm in that business with them, right? So I have to price it right. I can't compete with stupid, right? And when somebody comes in and wants it really bad, you got to be willing to step back. And so, as, Evolution Insurance, which I thought was a cool name.
Yeah.
But, buyers don't care.
Yeah.
Your name could be Turd. And if you had the cheapest, quote, it'd be with Turd Insurance.
Yep. Exactly. And sometimes they are.
Nobody knows who they're with. It's like, who you with? Lockton, or, Gallagher. And I'm like, that's not who you're with, dude.
I got a piece of paper. That's all I needed for my attorneys or whatever. Here's my piece of paper.
But again, in the most litigious place in the world, where everybody's afraid of the legal system, they think it's not fair, right? And I think regardless of what you think of President, he's proven that it is fair. You just have to go the next, if you lose at your first court, that's like the first inning of a baseball game.
Yeah.
Yep.
There's a lot more that you can do if you're not wrong. And sometimes you have to appeal. And, I've handled so many lawsuits nationwide. I got way too many stories. But, I always thought, why do people go to Lloyd's in London? What's so special about Lloyd's in London? And for some reason, they're, 300-year history and everybody thinks they're great. But I thought, we should have a company here in the U.S. that replaces them. And, then
Were they kind of initially your reinsurance, your backstop, so to speak?
They basically were the reinsurer of Homestead Insurance Company, which was the company that allowed me to underwrite it and manage the claims. And they let me go to California and get the Supreme Court ruling that upheld the release form, which proved all the lawyers and everybody wrong. Like, they're no good here. Truth about any contract, any release form, any immunity. Like if a cop says, I got immunity. No, you don't. Mm-hmm. If you cross the line and wrongfully arrest me, your immunity goes away. Mm-hmm. Same with a release form or what's really assumption of the risk.
Sure.
And if you assume the risk and you release me of it, I can enforce that, right? There's no doubt in my mind. So smarter people will say I'm wrong. They don't work here. Bullshit, right? I risk my own money and I win. New York with minors, we've won. And, they're no good with minors. Assumption of the risk, doesn't matter what age you are. If you assume the risk, if you want to go race a motorcycle and you crash, that's the risk of that, right?
Sure.
If I increase the risk, right, if I have a water truck out on the course while you're practicing, which I shouldn't do, and you land on it, now the release form is no good because what I did increased the risk.
Mm-hmm. Sure.
So you can't get out of that responsibility. So common sense, and lawyers and politicians and scientists like to make up new words and use big words to scare you all, and I'm just a dumb guy. Right. Like common sense, dude. Don't confuse me with all this bullshit. I don't believe that. That doesn't make sense to me. And plaintiffs' lawyers are very aggressive. And again, I'm very well known for years saying I hate lawyers. I don't like them.
Yeah.
I'm not sure I hate them. That's probably a strong word. But when you see them do stuff that doesn't make sense, like one of my first cases, we weren't liable. We wanted to fight it.
Sure.
So you hire a lawyer.
Yeah.
Spend $300,000, and then you get to the courthouse steps, and every one of them settles 98% of the time. So you spend $1 million to settle it, and you spent $300,000. I'm like,
which you could have just settled for less.
yeah.
And not had the
well,
attorney,
we could have
right?
just paid the $1 million right out of the gate.
Yeah.
No lawyer. I call it a bad divorce versus a good divorce. When you get divorced, you can do the same thing. You can say, honey, let's just split what we got and move on.
Right.
And we'll be better off. Or you can be a dumbass like me and pay lawyers a shit ton of money, give half your stuff away and start over again. But
Sounds about right.
And pay the lawyers on top of it.
Well, and so
Yeah,
my deal is bench the lawyers. Right? Mm-hmm. And to bench the lawyers is like being in a football game. You got to have a plan. You got to understand the rules, and you got to play the whole field. Plaintiffs' lawyers don't go out of bounds and claim they didn't. There's really no downside to a plaintiff's lawyer overplaying his hand, right? Sending him to a chiropractor and running up the medical bills so he can say, well, 10 times that's the value of this case.
Mm-hmm. Sure, which is
and,
common.
in Louisiana, they've been caught doing that. There's a ring now in New Jersey, New York getting caught. So, eventually, if you're a bad dude doing bad stuff, it does catch up with you. It just takes longer.
10, 20 years sometimes. Yeah.
You think it would be quick, but it's not.
It takes a while. Hey, to rewind it a little bit, Rick, I think some of, our listeners, health insurance agents, people in the space, just insurance in general, I think that in general, most insurance agents out there stop learning sometimes. They're not educating themselves. Things change frequently in the industry. It's changed a lot, I'm sure, in your career. And one of the things that I think a common concept is, some people don't even understand the difference between admitted insurance and E&S insurance.
Right.
You guys kind of do both. Can you kind of explain in layman's terms for people like why it's different? And I kind of have this perception too, just personally, where it kind of like a bank. I don't like the idea that you deposit it into a bank and it's backed up by the FDIC or the NCUA, and they're going to take all your money and go lend it out, make interest off of it, and only hold minimal couple percentage points, and then. But you're safe because it's FDIC or NCUA insured. I don't like that personally, where you have like an annuity or life where they got to back up dollar for dollar.
Right.
And I feel like it's kind of the same analogy between admitted versus, E&S.
Right. So, Katrina, I learned a lot, right? And so any government insurance is not going to work. I mean, nothing government works out. It's the most expensive way to do stuff. So, historically, you had to buy flood insurance from the federal flood program.
Sure.
And, if you got a home that's worth $5 million, it gives you $250,000.
Right.
$250,000.
Right.
If you have a commercial building, it's $500,000, which back when that was done in the 50s, 60s, that was more than enough for a house.
Yeah.
But it hasn't kept up like most government stuff, right? I mean,
It's not priced in. Yeah.
And so to get any, security from saying the government backs it up, to me, I think that's bullshit.
Yep.
Right? It's going to be a big nightmare. They're going to spend all kinds of money to divvy out the money.
Right.
And so, I was always saying, the government should allow me to give you flood. You shouldn't have to get flood from the government. And about 4 years ago, now that's legal. So when we write homes.
4 years ago, that's it?
Yeah.
It took that long? Oof.
Barely, and it's, again, most people still buy the federal flood insurance because it's cheap. So anyway, admitted is seen as the preferred market, right? There's certain agents and brokers that say stuff that I don't agree with, like admitted is better.
Sure.
Right? E&S is way better. Right? So when you have an admitted product, everything is filed and approved by the commissioner, by the insurance department.
Yeah, the state DOI and the NEIC.
So when you exclude earthquake and you exclude flood and you exclude mudslide, stuff that, I don't know why people don't worry about it, right? Because you should.
What's the point of insurance if you're not going to insure against it, right?
You're excluding things where people need it.
If there was no such thing as insurance and you just had your own bucket that you put money in to pay for your claims, and a flood came along, you wouldn't look at yourself and say, we don't cover flood. That's what your insurance bucket is for.
Yep.
It's to cover everything.
Right.
Right? The only thing insurance can't cover is a crime. Right? So again, as it's evolved, now people exclude any alleged crime, which to me is, that's kind of disingenuous, because when you're alleged to have done something, you're innocent till proven guilty. So why would your insurance carrier exclude that?
Right.
Well, because they don't want to cover it, right? And so admitted products are made to be cheaper, and I call them cans of corn. Right? They're approved. They take away your flexibility, and it's packaged by them, for them, and approved by a regulator.
Right.
So when there's a big earthquake and it's a shit show, and everybody's looking to the government, like in Hawaii, they're like, where's the government? Where's the government? I'm thinking, where's your insurance guy with his checkbook?
Yeah.
Because what are you going to talk about?
Right.
I can tell you what happens in Hawaii on all of these things is they send out a guy with a clipboard, and he re-underwrites the risk. And I know that because of Katrina. Right? We had 1,200 claims when I was a little shitty insurance company, and it took us probably 6 years to close everything. I took a case to trial in Gulfport, Mississippi. Everybody said I was going to lose. And this guy had a $50,000 dwelling, minor damage. We paid him, closed the claim. Then the commissioners extend the time to make a claim. So then everybody gets a new lawyer and they make a supplemental claim saying, oh, there's stuff we didn't think about.
Right.
Yeah.
So you'd pay him again. So I overpaid every claim. Well, this guy, he sued me for bad faith, $5 million, and everybody says you're going to lose. I went to a jury trial, and that's why I believe in the legal system. I spent all kinds of money. And the local jury agreed with me. They said if Prime would have been my insurance company, I would have been happy with the way they treated me. Mm-hmm. I went to the Supreme Court in Michigan, where a property owner alleged that my policy was illusionary, right? Which is that's what plaintiffs get them to sue you for when they don't get what they want. And the Supreme Court ruled that my policy was the most clear, unambiguous policy they've ever seen, because we gave examples, which as you're selling somebody insurance, you shouldn't, if there's price, I always say, dude, slow down, right? Let's talk about what a claim looks like.
Yep.
Because if you have a claim and I can't make you happy, you're going to get a lawyer and sue me.
Yeah.
I've been doing this too long. I'm 3 steps ahead of you, just like sports, right? Everything I learned was on the playground and playing sports. And you have to think about what comes next if you do stuff. If you start settling bullshit lawsuits, you don't have a business anymore.
Right.
It's like the bully on the playground. Your dad gives you more money, he'll take every dollar you have.
Yep. It's like you're sending the message. It's easy money.
I argue with agents and brokers all the time because they think the admitted market's better. I'm like, the admitted market, in most cases, the guarantee fund, if your company goes broke, is $300,000.
Right.
You got a $5 million house.
Yeah. So to kind of back that up, so let's say, just so people understand it, let's say you buy, and I'm not dogging anybody because I don't even know. Let's just pretend somebody has State Farm or Farmers or whatever. Name your favorite big insurance company.
Can of corn.
Fake
Someone gets a
Jake, I call
yeah,
it.
yeah. Someone gets an insurance policy, right? And it's an admitted one. They're following all the state guidelines, in that particular state, which vary state to state, right? They follow all those guidelines. And essentially it's a contract, right, with you and that insurance company. And then the time comes where there's a claim to be had. And then let's just say, that insurance company is not solvent or can't pay the claim. Then there's that backup guaranteed fund from the state that is going to be there to kind of save the day. And so that's really what, in a nutshell, admitted insurance is. But you're banking on the fact that, number one, that insurance company is going to be solvent and pay the claim. And number two, that if they're not, then you have that state guaranteed fund.
When the insurance company goes insolvent, the state takes it over.
Yeah, yeah.
Right? And so they corral the assets, and there's some money there, just not enough. And the time delay, right, before they pay you.
Sometimes years.
Yeah, it's three years. Margaritaville, the new hotel in Fort Myers, Florida, brand new. I insured it, and they had 2 hurricanes. Right? And I don't exclude flood. I cover them. Right? There's no deductible. So it's a $110 million building. Normally, it'd be a $10 million deductible. They had 2 claims, 2 storms this year, and it was mainly cleanup. I think the first one was $800 to $1 million. I paid 80% of the claim. They paid 20%. So our interests are aligned. When you go to a body shop says, "Hey, who are you insured with?" And you say, "Oh, but what's your deductible?" Roofers and body shops are the same. What they're going to do is try and help you out by screwing the insurance company.
Right.
So to me, deductibles are evil. Right? The whole industry should remove deductible. I don't care whether it's life, health, whatever. Your interests should be aligned. So when you're getting a new roof, you're both paying your percentage and you're not trying to screw each other.
Yeah.
And, we were down in Fort Myers within weeks after the first storm, and we paid them, and they were back open. Second storm, we paid them. They had a claim in Ian, right, 3 years ago.
Yeah.
And they're still waiting to get paid. So, again, it's a slow walk process. And to me, I don't like outsourcing. That's why we went down there. And, no clipboard, no measuring, which is what I learned in Katrina. When you re-underwrite, right, you had the square footage.
Right.
You agreed the value. You agreed everything. Then at the claim, they didn't have the right co-insurance.
Right.
Whose fault's that? To me, I think it's the insurance company. I'm
Yeah.
not taking your money if you want to insure it for half of what it's worth.
Right.
Right? You're a fiduciary, and you should be setting this stuff on a good foundation, not saying, no, don't worry about it. I'm never going to have a claim. And when buyers say that to me, I'm never going to have a claim. I just want the piece of paper. Yeah, I don't want to do business with you. When I was younger, I did, and you end up regretting it every time, and that's why Florida –
Yeah, well, you regret it once the claim happens because it's not an if, it's a when, right?
and everybody knows what happens in Florida. They go bankrupt every time. The market goes up. They don't fix it. Right? They increase deductibles. They leave the exclusions on there. So, again, getting back to admitted versus E&S. E&S companies have a higher capital requirement.
Sure.
Right? And to me, they have the flexibility. So, I didn't write auto till the auto market took a tank.
Yeah.
And pricing went up considerably.
In what,
And
like
then
more
it's
like the 90s, something like that?
yeah, it was probably later than that. It was probably like
Early 2000s.
2012 or something.
Yeah.
It hasn't been that long. And, again, when stuff hits a hard market and pricing goes up, it cycles, right? It goes back down. Trucking isn't going back down because the legal machine is eating it up. Florida homeowners,
Roofing there, and
people used to say property short tail, like in London. And I issued Lloyd's paper for like 10 years, and I took 25% of the risk. So when you say, who are you with? I'm with Lloyd's in London. No, you're not.
Right.
You're with a syndicate. And that's like saying, what stock did you buy? And you're like, I bought New York Stock Exchange stock. And it's like, no, you bought a company, right? So Beasley's a big syndicate, Genry has one called Faraday, but, they're E&SE doing, a lot of stuff like I would. But, again, they wouldn't do the Rolling Stones concert, so a Lloyd's broker brought it to me. And,
So
I've never done it before.
yeah. So what went into that? So you told me you were the underwriter on it. What did you have to think about?
Well, you have to think, how stupid am I if they have a claim to write it when nobody else will? And, again, to me, it's about the relationship and the partnership. So my first statement, and a lot of the big homes that we insure, the one guy that just sang at the Super Bowl, we insure him. And I talked to everybody. I talked with Keith and Mick Jagger. That's my requirement. Like, look, if I'm going to insure them, I'm going to have to make them happy in a claim. Sure. I want to kind of talk about that. Again, be ahead of the ball. Say, look, this is how we're going to be good partners with each other. And, their deal was death, like Key Man, life insurance on two rock stars that partied like rock stars. And
For a couple decades.
everybody's else like, no, we're not doing that. So, they were healthy, and I got doctors' information, and we had conference calls with, their medical people, their managers. But, my deal was with them.
Like a paramed kind of a thing, like a light paramed on them, probably.
Right. Yeah, we just got as much information, and they had to give it to us. If they wouldn't have, I wouldn't have done it. And then, the venues that it happened, because we insured, they were canceling events during COVID, and there was a threshold. Sometimes they said you could only have 75% occupancy. Sometimes they'd say 50, and
Real scientific stuff there.
Yeah. Well, in the cities, right?
Yep.
It wasn't Portland, it wasn't Seattle, which would have been different than it being, L.A. wasn't the best, but they actually did 2 shows there. Philly was one, New Orleans was one, which was actually the only one that got canceled. So that was a little pucker up moment. 3 more and I'm paying.
Yeah.
So anyway, again, when you write something as an underwriter and you live with it for a year, again, when it does happen, which it does, right? You're going to pay limits policies because stuff happens. You want to look back and say, would I do it again that same way, right? And that means you did your job right? You don't abandon your partners. If you take people's money and then it ends up where you look back and you're like, man, I'm not doing that anymore, which is what State Farm and everybody in California is doing.
Right.
They should have been evolving over time.
Yep.
Fired risk is getting worse, there should be stuff you're doing. You just don't let it get to a panic point and abandon the market, which, again, as an industry, my approach is the government should get out of insurance. And if I insure your home, I have to do the whole job. You can't exclude anything, right? Your home is your most valuable asset. And for insurers to take your money, and then when what can happen does happen, you're like, oh, and even in North Carolina, they're like, well, we're not in a flood zone. I'm like, why wouldn't you have flood coverage then?
Yeah.
Right? Why talk about perils?
Right.
So lawyers, and it goes back to Katrina again, wind versus flood. That is the argument they always have, right? Earthquake versus homeowners. It'll be the same. Mudslides, there's only like 3 homes that get wiped out. So, like the tornado that hit Joplin, Missouri, I did the tow truck operation there. It's a really small town. Totally devastating. Nobody gives a shit. Government ain't showing up.
Right.
Yeah.
It's not big enough to get the politicians involved. So buyers should say, look, I don't want to put the pressure on the government, because when the bill comes around, who pays it?
Taxpayers anyway.
Yeah,
Exactly.
It's the most inefficient. So if you're an insurance company going forward, you should do the whole job. And there's a congressman in Louisiana. He used to be a sheriff, and I just forgot his name, but he has a bill in Congress that says, you have to offer them everything. Right?
Yep.
Like PIP on your auto insurance, you can reject it. So if you want to reject earthquake,
I actually didn't know that you could reject injury protection. I didn't know that.
Well, in some states you can, some states you can't. But if you do it, and I have your rejection form, you can sue me. I'm going to win.
Yeah.
Right.
And that's really what they should do with wind versus flood.
Yeah, I think I would kind of chime in there too and say that I think that to your point, government needs to kind of stay in its lane, in the sense that with insurance,
Don't grow it.
Yeah, when it comes to insurance, like that's like some of the problems that we're really seeing is, especially like admitted, like talking about everything that's been happening. You've been talking about 40 years worth of claims, but even just in like recent history, these last couple of years, you're seeing all these disasters, all these things happening. You're seeing all the litigation, the litigious behavior happening. States going bankrupt, as far as carriers pulling out of the states and just saying, hey, you know what, we're not going to do business anymore, because the regulators and the lawmakers have put all these restrictions in place that don't allow insurance companies to properly price everything in and truly underwrite it. And then when the claims come,
as an industry, we have to see what's going on. And I don't think anybody is, but I'm going to do it anyway, which is, if I'm going to do it, I'm going to do it to where I know the legal system, right? It's contract law. Admitted policies are contracts of adhesion because they're approved, they're, all canned up, and the buyer doesn't really get to negotiate.
Yeah,
right?
correct.
E&S is a contract law. You're free to negotiate whatever. And, you're supposed to get 3 declinations from an admitted carrier. That's supposed to push everything to the admitted market. But when the admitted market won't give you a certain coverage, that opens the door. If I'm giving you, an all-in-one policy known as a difference in condition on any property, I'm giving you what they won't, and you can choose to do that as a smart buyer, right? There's no law that you're breaking. I don't need 3 declinations because they won't give you what I'm giving you. So that's like a trump card.
So take California recently, for example. Why did the system not evolve to what you're describing with E&S, and then with the system that state regulators prohibited some of these insurers from raising premiums to a certain level? What basically went wrong?
Yeah,
I want.
Hey,
Yeah,
you're going to get.
You say whatever you want to say.
The honest answer.
To you on the podcast.
My honest, and again, it's some of this stuff. You wonder if it's incompetency or an old system that doesn't want to change. But I think old-fashioned underwriting is I like giving people decisions. Right? If you're an expert, I want you deciding what helicopter ski company we insure and what dumbasses we don't insure, right? But admitted insurance companies are cans of corn, right? And then if they don't like a zip code because it's wildfire or it's on a fault, they don't write there. Right? So their intent is to write the shit out of it and never have a claim. That's why even if it's an individual claim, when I ask people, so do you report all your claims? And they're like, well, no. And I'm like, well, why not? And I said, because they'll cancel me. So if you know that you can't use your insurance, you know it's fake.
Right.
So, and I think, again, the same can of corn we've been issuing forever, same flood program that's never evolved, which is proven to make lawyers rich. How hard is it for me to do the right thing and just be honest with people? And, again, Citizens Insurance Company in Florida is the biggest insurer in Florida, and it's government-owned. It's state-owned.
Yep.
The FAIR Plan in California is the same. And that's where everybody went that bought insurance because it's cheaper. Now, if you have a $10 million house, they only issue a $3 million policy. So what do you do there? Well, you buy an excess policy.
Correct.
Anytime you're sold more than one policy to insure one thing, you're getting ripped off.
Well, and they're also, when there is a claim, they're going to squabble back and forth.
That's right.
And also
Right.
point the finger, just like the Spider-Man meme where they're like, who's paying for this and we'll pay after you. And then getting claims settled is a nightmare. And then I would also say that, it just seems like they haven't, adapted. Like the regulators won't let them underwrite, won't let them do their jobs. And the bigger concern that I have is that over time, as more and more carriers, even on the admitted side, pull out of a state, it leaves what as the insurance company? The government, right? And that's what I've been saying is, right now, even the premiums, if you look at like Hawaii, California, Florida, some of these markets, the biggest insurers are already government ran. Right. And then if you run out more of the private market insurers, suddenly, well, who's their competition to really even compete? Where else are you going to go to get the insurance coverage? Right.
So again, to me, buyers have a role too, right? They have to be responsible. You teach your kids to be responsible. Don't buy a Bentley because you can afford the Bentley. Make sure you can afford the insurance, because you can't be irresponsible and kind of just keep making the same bad decision over and over again. So, when the truck market went crazy, I formed an admitted carrier and I went to Illinois and I filed my rates. And when insurance companies say they won't approve our rate increase, right? So if I come to you with a can of corn, it's like, look, we're going to be a great partner. We got the best product. It's cheap, blah, blah. And I approve those rates, right? And then you come back for rate increases all the time. They think that's their job, is to hold you to what you filed. So I go in and I file, and my rates are higher because they're all losing money.
Yeah.
Right? And I'm like, so I'm concerned that you're not going to give me enough bandwidth to have the flexibility I need to make money here. And they're like, we don't care what rates you file. We'll approve them. You're not going to write anything because you're higher than everybody else. And I'm like, yeah, but they're losing money.
Right.
So, again, if you go in with a smart approach, I don't think it's the regulators that wouldn't approve it. They just think, keeping you in your corral is their job. And again, as an industry, if we stop selling, you can't be half pregnant, right? If I take your money, I got to make you happy, right? I can't do half the job. If I send you down a dead-end road, you are going to sue your insurer.
Right.
Lawyers are sitting at the dead-end road waiting, just like they are at a bus accident.
Yep.
They know where the good shit is. And if you go back, look at Florida, it's like, the best experiment ever. Go back to every storm. Utah Home Fire, which was owned by the Mormon Church, went bankrupt from a storm. And instead of going broke, they stepped up and paid all their claims and shut it down. Everybody else went broke. I think it was in the 80s. And, that's when I worked at my dad's MGA, and I knew all the guys at Utah Home Fire. And, again, I thought what they did was sell cheap insurance, which means you can't survive a test. Right? It's like everything else. Anything you're trained for, you test, and it works. Right? Computer system, we have to have a system, and we have to have it tested. So if we're building blown up, we can be up and running within 24 hours. And the regulators come check it.
Mm-hmm.
Right? If we failed that every time, right,
Yeah.
they wouldn't let us be in business. So, you know, the fact that every time there's a catastrophe, which you mentioned, you know, means to me, look, this is stupid, right? Buyers need to realize that trying to buy cheap insurance in the long run is costing us all more money.
Yep.
Relying on the government, you know, and again, back in the day, the insurers would say, we can't cover earthquake, you know, we can't cover terrorism. Bull, right?
Right.
Mm-hmm.
I can cover it all. I can cover active shooter, anything that somebody's going to sue you for, I can cover. So, you know, if a admitted company wants to write hotels or restaurants, or, you know, everybody says, what's your appetite? You know, I'm like, I don't really have an appetite, because that means that you want me to be stupid.
Yeah.
Right? So will you write monoline liquor? Yeah, I've done it forever, but I don't like doing it because the two policies are going to fight.
Yeah.
Well, we got a great program with Chubb, right? And it's like, well, how great is it? Because they don't want your liquor exposure.
That's true.
Or, you know, they don't want wind and flood in Florida. Chubb has a great homeowners, but they don't want wind and flood. And I'm like, well, what's great about it? Because that's what you have in Florida is wind and flood. So they want to carve it up the way they want, their can of corn,
Right.
and be exempt from paying a claim.
And then they want somebody else to handle that carve out.
Right. And then they have a big deductible, and they're trying to get away from the claim. And the minute they know they actually have to do their job, they run.
Yeah. But I think, you know, kind of what you mentioned, though, we have problems like we see it, like we talk about in our business a lot. It doesn't matter what the insurance broker is selling, whether it's, you know, pet insurance, whether it's dental insurance, whether it's home and auto insurance. It doesn't matter what it is. We feel like there's like a societal and a cultural problem, though, in that consumers are lazy and they're uneducated, and consumers don't understand that they're getting into a contract by getting an insurance policy. And it's like, what kind of a business deal would you ever do where you don't read what's in the contract, right? But consumers don't read, and so they're ignorant.
Well, but
And
home closings, you don't read it all either.
Yeah.
You go in there and sign, but the point is they got you.
Yep.
Right? It's all there. You
Yeah.
should have, you know, insurance is sloppy delivery.
Yeah.
Right? There's
Yeah.
too many people, nobody. So
Yeah.
all of my policies, I have a policy receipt for them, because, you know, when they claim that you didn't do this, you didn't offer me that, you know, you do. How do you prove that? Well, you have them confirm that within 30 days of delivering the policy that, look, we just want to be clear that, you know, you rejected flood, you didn't want earthquake. And again, you know, offering it to them, even higher limits, right? Insurance agents get told, don't sell less than $1 million policy. That's like a standard rule at the big boys. Yeah. And I'm like, well, what if they can't afford it? It's a small business, only makes $100,000. Sell them a $300,000 limit. We could get sued. Well, not if you offer them the higher limit, and they choose not to buy the higher limit.
Right. They
That
just need to
kind of
insure what
benches
they
the
need to insure.
lawyers, right? But insurance products are canned, and they say, we'll do that, but you can't offer more. You have to go get excess, right? So, again, don't do half the job.
Yeah,
right?
but I
And
think
it's real easy.
I think it's kind of like it's the half and half, though. It's the consumers don't read it, but then also the brokers and the agents or the MG, whoever it is that's selling the insurance product too, they're not doing a great job in sometimes, just in general, you know, they're not doing a great job in educating the buyer, explaining any limitations, really being
Well, and
thorough.
same with the fair plan or you know, any government agency, the homeowners market, the cheapest is always the state-run plan. And to me, again, it's to grow real estate, right? If you want to go live there, you know, and you can afford this house, can you afford the insurance? And so, you know, is that the state's role, is to provide cheap insurance so that we can all drive cars we can't afford?
Yeah.
No. So there does have to be, like, everybody has a role to play here. Buyers need to say, okay, let's live in reality,
Yep.
right? Insurers need to say, look, we're going to give you everything you need, or we're not going to take your money, because it's, to me, it's kind of like disingenuous, right?
Yep.
Was it intentional? Was it on purpose? I think it's just the way it's evolved.
Right.
Everybody's doing their job, and nobody's, you know, again, on a good team, when you're on a good football team, every player knows the other player's job. right? And if they see you not getting your guy, they help you out. Big business, big corporations, the most funny thing I hear all the time is that's not my job.
Yeah.
Right? I'm doing my job, and the guy next to me is doing his job. Well, you're supposed to all kind of coordinate the jobs to make sure you're doing everything right and not being taken advantage of.
So this all sounds very good and common sense, right? And obviously you've had a lot of success by doing insurance business this way. What's the thought of why the broader industry at large doesn't operate like this with these common sense principles and essentially factoring out? Is it that there's no potential profitability as a company? Is it the risk is too large? Is it the premiums would be too hard for actually good insurance? How's our system kind of evolved to where we're at?
I think it's, like everything, it needs to change, right? So one of the biggest things, a bucket. Again, you put your money in a bucket, right?
Yep.
And that should pay all your claims. So you buy insurance and it has leaks in the bucket, right? So how much should it cost an insurance company to issue paper? Right? So most insurance companies on the P&C side, their expense ratio is close to 40, right? That seems like it's a lot to me. So my company's 20. Fundamentally, that's an advantage I have, and I saw that from the beginning because I was an agent, I was a broker. I don't. If you're an agent, you buy an agency system. If you're an MGA, you buy an MGA system. Then you got to buy a claims. I have my own system. I didn't buy anybody else's stuff, and I've been evolving it since '86. So I can bill an agent, I can bill a wholesaler, I can bill direct. I can execute in all 50 states, and so that allows me to have a different approach than what the big guys are used to. And the big guys don't like me, right? They want higher commissions up front, right? They're coming to me with business that they can't place anywhere else. They don't have an answer for, and the premiums are doubling and tripling. Do they deserve 3 times the commission on an account that failed? Right? They placed it with a market that didn't do their job. The insured may not have done their job,
Right.
But everybody's paying, and the producers make more money.
Right.
So, to me, I'm like, look, the commission I pay you is part of the whole transaction.
It should be commiserate to, whatever they were going to get.
How desperate they are, too. I mean, if it's like a fire sale, right, and the premium, like one guy quoted yesterday was $300,000. His premium is now $1.2 million, driven by claims. He didn't have the claims.
Yeah.
Right.
He wasn't insured with me, and he's saying they overpaid my claims. And I'm like, so you expect me to take risk on top of risk and become your partner?
Well, but I think that idea on the commission side, though, too, comes from, just the broker side and not even understanding that, in their mind, they're going, well, this premium's so big, right? And so they just think there's all the
they're
zeros.
like a real estate agent.
Yeah.
It's like, I get
Percentage
like 3%,
of rev,
man,
Yep.
Well,
and I get that. So my other caveat to the way I do it, and I do this with my reinsurers, again, you try and align everybody's interests. So when we win, we all win. Right? When we lose, we don't lose, but we can keep going forward. We don't have to abandon ship. So I pay a profit sharing, which is higher than the commission they ask for, right? So it's like, look, let's be reasonable, right? And I'll pay 10%, and you can earn up to 22.5, right? That's normally they're looking for 20 or something. So again, it's a better approach, right? Where all of our interests are aligned, but the big guys are like, no.
They just want a flat
We
20.
want it all up front. We don't want any skin in the game. We don't want to take any risk. And, from my perspective in the P&C world, I don't know life and health. I buy from Blue Cross Blue Shield. That's all I know. And I don't trust them either. So anyway, the agents and brokers, they have now gotten all the incoming capital into our business. If you look at big events historically, there's always big new reinsurers formed with like billions of dollars because there's a capacity that's gone and new capital needs to come in. If it did, pricing would be extreme. So, all of that money has gone to buy agents and brokers and put them into these big behemoths, right?
Yep.
Assured Partners, Gallagher. I mean, the list of big brokers making transactions, and, to me, my opinion is they overpay for them, right? And their model is everything goes up to the mothership.
Yep.
We paid him for his ownership, but they lock him up for 5 years.
Mm-hmm.
And he's got an earnout, and it de-incentivizes him to do his only incentive is I got to get my earnout.
Yep.
But it's all for this mothership, big payday at the end of the deal. And now Gallagher just bought Assured Partners, which is a big deal, but I don't think it ended up the way Assured Partners wanted. I know enough about how that money flows that when you take money like that, they have an exit door of 3 to 5 years.
Sure.
7 is a long one.
Yep.
So if I look back at my company over 40 years, last thing I needed to do was stop to get you your money out, right? And I know enough about, there's a publicly traded company that put $7 million into me, right? And I got my A rating at that point. And, with the dividends I've given them, the reinsurance premium I've given them, and the increase in stock value, I've made them over $200 million.
Wow. It's a great ROI.
Wow.
Yeah, well,
Hey, I'll
they're
take it.
not happy because they want to own me.
Yeah.
That was their whole plan all the way along. And I told them from day one, I'm never selling. But when you're in the insurance business, you kind of get in some situations where you have to have more capital
Yep.
to keep growing. And, I was really lucky that I met a Jewish guy that knew, a Jewish guy I knew from Homestead Insurance Company, and he bought non-voting stock.
Wow.
And they were sure I wasn't going to be able to raise non-voting money, and everybody says that. Nobody's going to buy non-voting stock. Well, I made him money too. He put in $10 million, and he carries it on his books for over $30 million. So again, to me, performance, execution. Can you stand the test of Katrina and survive, or do you go broke? And because of those learning lessons, which are disappointing, like all bad things in life, if you learn from it, it's not a bad thing. And buyers should learn from it. Banks should learn from it. California is going to make Florida look like kindergarten because of the devastation, right? There's never been a storm where it was everything burnt to the ground.
Yeah.
Right.
You go fly around in Florida.
In Palisades.
I mean, there's literally people playing golf on the other side of the highway, and it's, not total devastation where the storm. The old stuff, it's devastated. The new stuff pretty much survives, the storm. It's just a bunch of cleanup. So obviously when they build back Avondale, the big place where it's totally gone, it'll be better. It'll build back better, and that's not a bad thing. The bad thing is all of the pain and suffering that, the people have to go through because they relied on the government too much.
Yep.
And they didn't really worry about, what happens. They didn't think it through. That, there was one couple on the news where they got paid. Right? They had insurance in the first fire like 5 years ago.
Yeah.
They sold their lot and moved into Avondale or whatever the name of the big.
They're in the
destroyed
Palisades
Yeah.
area. Yeah.
And they didn't buy insurance, and it burned down now. I mean, again, if you won the lottery, right, like they did, and insurance worked for you, and I'm sure they got a good price on the house because wildfire, they probably couldn't get insurance.
Yeah.
So, how many people didn't buy insurance, or if they did, they bought it from the FAIR Plan. The FAIR Plan has already told everybody that hasn't had a fire that you're going to get an assessment, kind of like a homeowners association.
But
What? What? You gave me a quote, and now
Yeah.
you're assessing me? Where did that come from?
right.
Right? I don't get to assess you. That's why I got to get the price right to begin with.
Well, a lot of those people are probably going to get, pennies on the dollar, so to speak, when you really look at true like replacement cost and everything else right now. Price of inflation, everything else, just even the appraisal of the dirt. I mean, everything, in that whole California fire. I mean, I imagine that 50% of those homeowners are never even going to be able to afford to rebuild and even live in that same area.
So what does a good claim look like, right? So if I insured your house there, it wouldn't be underinsured.
Right.
I wouldn't give you a big deductible. We would be sharing risk, and I would be giving you the money to build back first, and you're not getting 3 bids and picking the cheapest one.
Sure.
You're going to the contractor saying, hey, we're ready to start doing it right now because time is money.
Yep.
The longer, if your roof's gone and it keeps raining like in Florida, you want that sucker fixed now, and it's going to cost you more money.
Well, not only that, but then the other thing is, even with some of the, regardless of whether it's admitted or E&S or whatever, but then there's all of the expenses too that are paid out for other housing and those other costs and expenses and everything else.
Well, and that's why you don't offer people cans of corn, because when you buy a homeowner's policy for $5 million, they give you 2.5 in contents, and I would always say that to my State Farm agent. I'd say, I don't have 2.5. Oh, that's just what you get.
Right.
Well, you know what they're going to do when they sue in California? They're going to say, why would you put a limit on there that I could never get, right? So, again, you don't want cans of corn, right? Some people that we insure say, I don't want contents. My contents, my house up in Heber, is 12 years old. So how are you going to depreciate that? Even if, you said pay me, they'd say, well, it's pretty much, 20 years is the life of furniture, whatever it is.
There's no value.
So you're not going to get it. So most important is to cover your house. I don't give a shit about the contents. Some people have a second home they can go live in, and they don't need additional living expense.
Yeah.
Right? So when you buy California Fair Plan, $250,000 of the $3 million limit they'll give you has to be for code improvements.
Really?
And if you put contents on there, so, now you're reducing the amount you can put on the building.
Yep.
That right there should say, look, I don't give a shit about any of that shit. I want my building.
Yeah.
Right.
And if I'm self-insured on earthquake, I'm not going to have my building back. If I'm self-insured and if I can't pay my deductible, what does the insurance company do? So my policies allow me to fix it and loan you the money because I am now your partner. I'm kind of like the bank.
Yeah.
Right? If I don't fix that house, it's going to get worse, and it is going to end up being a lawsuit. We know that because just look at all the events where that's where it ends up.
Yep.
So, do your job. Buyers need to kind of do like a mock claim. Right? I don't care what it is. And we insure everything from dog bites, right? Your dog bites somebody, you don't have coverage, the dog catcher's going to kill it.
Right.
You can buy a $100,000 policy online at X Insurance and get your dog out of jail. Now, the dog catcher kind of helps us because they don't give you the dog back unless you meet certain requirements of them. And, again, it's most people I deal with where their dog bit somebody, they don't ever want it to happen again. They're paranoid about it.
I got a couple questions for you, Rick, before we run out of time, because I'm
interested what your questions are. Yeah,
I know I can hang out with you and talk forever, but I was going to ask couple things. One, you mentioned something that is kind of struck me or is interesting, like conceptually wise about paying broker commission. You kind of mentioned we pay less, we pay 10%, but then you do profit sharing with the broker, which I actually like the idea of it in the sense that you have skin in the game. That incentivizes a broker to place the business somewhere where they think they're going to manage it and run the claims and run the policy as they should. And
they're really worried about having a good, stable book, not a book that falls apart.
But I like that conceptually, and I just bring that up because we talk to a lot of people who chase certain commissions or payouts or cash up front, regardless of whether it be real estate or insurance or whatever. Salespeople are salespeople, right? And they try to chase the big bucks usually, and in the long run, it bites them. So I just think that conceptually, it was a great idea or concept you've modeled out that I really like, the profit sharing with them. I really do like that. The other thing I was going to say is, you've talked about the Evel Knievel event when you were a kid. You've talked about insuring Rolling Stones, Margaritaville. What's the weirdest thing that you've insured over your career?
Well, I mean, we do Mount Everest trips. We paid for the highest rescue ever on Mount Everest. Helicopter. And
Was that Nimsdai? Was that their team? That Nepalese guy, the rescue there?
yeah, I mean, the Sherpa that's
Yeah.
in Utah.
Yeah.
He's done it more times than anybody. But
I didn't know
we
they did
insure
helicopters
the
up there.
companies that take people over there. They do Denali. Denali is actually the most dangerous peak in the world, which is now back to Mount McKinley.
Yep.
But, there's only a few people that do it. It's permitted, obviously. Mount Everest, there's a whole different system over there, but these guys go over there every year. We do a lot of foreign ski trips. So we insure people, U.S. operations that operate worldwide.
Yep.
Yeah, the Bartman Ball, I forgot that. There's, the Bartman Ball, that was the Cubs game where the guy reached out and his name was Bartman.
Yeah,
He
Bartman.
was hated because they lost it.
Because he stole the ball. Yeah.
And it caused.
And you
Insured that, or
Well, Harry Carey's bought the ball, and
Okay.
then they were doing like a promo before the next season to explode the ball. And then they got to the event, and nobody would insure the explosion of the ball. And so, I called the pyrotechnician that was doing it and stuff, and I said, everybody expected it to blow up, right? And it was in a glass case, and I watched it online because, again, you wrote it, right? And you're wondering what's going to happen here. And they did it outside in the parking lot, but it was still an explosion, technically. But it just fizzled. It was like a sparkler.
anticlimactic.
Like,
Yeah.
holy shit, they paid that?
Yeah.
disappointing. You're like, well, that was a good choice.
No,
we
it
made
was
some
awesome.
money.
It didn't explode and kill somebody.
We made some money on that one. Yeah, there you go.
So along those lines, I have a question about how you factor in risk actuarially, because you do so many out of the box things. You're not doing cans of corn. These guys all have teams of actuaries that are, they have data sets that they're used to looking at.
Right.
How do you find, I guess, data points to do your risk analysis, and how much of it is scientific versus how much of it is your good old experience finger in there?
I think if you look at actuaries with government programs, they're never right, dude. They're like weathermen. I think they're probably worse predictors of what's going to happen. And again, they would tell you the information I got, it changed, and it's like flying, right? You better fly. You pay him to make sure that your actuary and you definitely don't want to be too cheap, right? And you don't want to be so much that they
Doesn't make sense. It's prohibitive.
Somebody,
Yeah.
right. So to me, it's common sense, and the biggest factor is who am I dealing with? Right? If you're dealing with a rich guy that sues everybody and causes all kinds of problems every time, and he just turns everything over to his lawyer, no, right? And I insured the most expensive Aston Martin ever bought and delivered for $4.5 million. And Parker's brother was working on it, and the guy, he quoted him $56,000 for one day, which could be a lot. If he drives it right into the wall and it's totaled, it's not near enough. I can tell you that. So, what's the deciding factor? I said either he's stupid, right, or he wants to crash it. He's now upset that he overpaid for this and he wants to total it instead of trying selling it. So I said, get him on the phone. And I asked him, I said, so you're the guy that paid more for this car than anybody else on the planet? You really wanted it that much? And he answers the question. I tell him, I'm afraid you're going to drive it in the wall. He says, dude, I want this car. And, I can afford it, no problem. I am so upset. I bought this car. They won't deliver it to me unless I prove to them that I have it insured, because they don't have it insured. Right? And it's because he paid $4.5 million for it, not whatever the real price was.
It's the transport they were worried about.
Yeah.
The liability of it is to try. Okay.
Well, they delivered it at the track just north of Opelika, which is the Ferrari track. I don't remember the name of it, but I've been there a lot and met with a lot of rich guys who want cheap insurance on their Ferrari. And I'm like, you're rich, dude.
Yeah.
Like, why would I do that?
Yeah.
So anyway, he said, I just want to get my car. Right? They're making me go there to get it delivered. They're making me drive with 2 Indianapolis champions because they're getting all this content and stuff out of it, and they want me to pay for it.
Yep.
Right? They should be paying for this. So I could tell that he was so upset, right, that he loved his car. He just wanted to go get his car, and he was happy to pay the premium. You know, probably could have done it for less than that, right, because the guy and his answers, and that's what most insurance companies don't want to do.
Right.
They don't want to talk to anybody. I remember when I was a young man, I'd go into the bank and I'd apply for a loan, and they'd come out, yeah, sorry, you didn't get approved. And I'd say, well, why not? And they're like, oh, the committee. I'm like, so can I talk to the committee? Oh, no, you can't talk to the committee, right? To me, that's
formula,
the opposite. I want to talk and hear the story.
Right.
That's what underwriting's about. Is what's the story, what's going on. But again, we've encouraged people to, you know, fill out the app in a way where they get the cheapest quote because they're really not living in reality, right? They want the cheapest quote. So, you know, again, I think that the opportunity here is that, you know, by doing it right, we're going to save all this money, right? If you talk about the bucket again and how you price stuff, I ask every insured, I'm like, okay, so you know more about it than I do, right? Your business, how you run it, who the people are in it. How much would you put in the bucket every year? Is it going to burn down once every 10 years? Is there going to be a storm once every 20 years? In Florida, the Florida homeowners companies, their actuaries use like a 120-year event.
What?
I know it ain't 120 years, dude.
Yeah.
You know, and you could get there by saying, well, we don't cover flood. You know, we got a deductible on the storm. And, you know, then you have like Chris Christie when Sandy hit New Jersey. He said it wasn't a hurricane. Well, why would a politician say that? Because there's no hurricane deductible. Yeah. Everybody's deductible doubles in a hurricane. So the government redrafts your contract. If you write catastrophes, you're going to be playing outside the lines of your policy based on a regulator trying to get kudos from the public and get reelected. So the smaller ones, you know, and again, the big accounts I really wanted, there's not many of them that I look back on and think it worked out. You're better off dealing with real people that think common sense and they don't like lawyers. You know, the bigger guys, they have lawyers and they trust their lawyers. One of the things I always ask people, who's your trusted advisor? Right? If we get in a real tussle with, you know, firearms industry or whatever, who are you going to listen to? Because I'd like to talk to them now.
Right.
So that we can all make sure we've huddled up and we have the same general opinions about paying, if you're liable, paying fast.
Right.
If you owe it, pay it fast. There's no benefit in delaying it. And if you're being blackmailed or it's frivolous, you never negotiate with a terrorist, which is what they use the legal system. Plaintiffs' lawyers have been doing all of this stuff they did politically forever. I think that's how the politicians came up with the idea. It's just like, well, let's hire some plaintiffs' lawyers and use those same tactics to throw shit up on the wall.
Yep.
Yeah.
And, you know, we'll cause trouble. They don't even have to win.
Right.
No.
Well, that's the concept of settling. Is it's like, it's just more of a, I'll buy my time. You know, I'll settle it.
Usually the settlements are more. It's just time and effort and waste. It's just like just make it go away. Right. So.
But you're going down that road,
correct?
Instead of the
right.
You know, and why would you settle a frivolous claim? Because I could lose my business. I'm like, dude, if you start settling frivolous claims, you don't have a business anymore.
Yep.
Right.
You know, it's over.
Yeah. Eventually roads.
Bench the lawyers.
Well, before
I like that phrase. I like that phrase.
Before we kind of just wrap up and stick a pin in it, anything else you want to add, Mike or Rick? Any last?
No, I think, you know, I'd like to take your whole business model and concept and apply it into health insurance, because I think that's a whole multi-hour, multi-day conversation that we could have conceptually. And all we have are very small cans of corn on the health insurance side of things. And as many problems as you articulated with what you deal with, we deal with that, you know, many times, many layers more on the health insurance side.
We deal with medical loss ratios of 85-15, like a 15%.
But I definitely think there's room and there's appetite for people who would prefer insurance policies to have those ideals, that ideology of it's a bucket. You know, we don't want to all delineate if and when this is covered and if and when that thing. Everybody needs, everybody needs to look at their health holistically, and every human being wants health insurance to function if and when you need it. You don't want to really go, oh, well, is this cavity caused by this, or, you know, all these different carve outs.
You're going to have
mental
to pay
health
for it anyway.
Exactly.
You know, and so to me, again, insurance shouldn't do half the job.
Yep.
Right? If you buy it, it should be like your partners.
Yeah.
And again, somebody with a deductible can't pay it, we ought to loan them the money.
Right.
Right. And be their partner and not create a dead end road where the lawyers are sitting there waiting to sue big insurance companies. And, you know, the medical field is, everything's outsourced now. That's, I think, nobody owns it, right? There was a gal in my office trying to sell me, you know, that all my health, you know, nursing homes, nurses, doctors would report claims to her.
Yep.
And I'm like, so tell me how that helps. Because I want them to report them to me so we can manage them together. And your insured is your best resource.
Yeah.
Yep.
Right? Like Margaritaville, they had cleanup crew, they had people in place. Why would I make them go get bids?
Right.
Yeah.
They know who they want to use or what's going to be effective. And if they're running their business and they're smart, they're going to get back to business quick.
Well, I was just going to say, I love the phrase you used with being partners, you know, and especially in your healthcare, right? As insurance partners, that's what we don't have is, you know, somebody wants to go out and see if they've got cancer and get an MRI or something. Nobody wants to go pay, you know, a co-payment on that unnecessarily. But if you're partners in your health and, you know, you're investing appropriately, I think those kind of concepts are really what we need in the health insurance side of things too, is those common sense approaches and a real partnership mentality.
Well, I would just to wrap to final thoughts, just anybody looking, if you have something out there, if you're a broker, an MGA, anybody else out there, if you got a weird situation, you've got a pilot that needs insurance, you've got to sell pet insurance, you've got an event, you've got some weird thing you're doing, a hole-in-one golf tournament, you got something weird.
You need your celebrity butt insured.
Your NIL, whatever it is that you need insured.
The biggest opportunity now is captives.
Yeah. Captives, okay.
Somebody's forming a captive. Tell them don't do it. You know, it's just going to increase your cost. We have a virtual captive where it's a partnership. Right? Instead of me giving some of your premium to Warren Buffett and him banking it in his bucket, we have a virtual bucket. We put your money in, and it's no cost. Problem with a captive is 40% expense ratio.
Right.
And you're risking your own money, and you're hiring the people that I wouldn't hire. Right. I'm your partner. I'm the one that you know, I'm risking my own money, and I know how to manage claims as good as anybody else. And I think better, but that's what you want is someone who isn't always trying to save money. They're doing the long view thing. Right? And if you're sick, you go take care of it. If you can't take care of it, and, you know, it gets really frustrating. I mean, when you're a parent and you got to get referrals from another doctor and stuff, a lot of that doesn't make sense to me. You know, and it's draining on your employees. So the Blue Cross Blue Shield program we have, I don't, you know, you can go to any doctor anytime, no referral required, because as a parent,
right,
you know, and you're my employee, and your kid's sick, and you're trying to get to the right doctor, and you can't. That's mentally not something that you want your employees going through.
Yep.
Right? I don't want to go through that personally, and that's everything I do. I look at it like I'm a consumer.
Right.
Right. And so would I rather have proper coverage? It's more money. But, you know, most people drive nice cars. Most people spend money where they, hell, all these people go to Taylor Swift concerts for $1,200. And I'm like, so you can afford that, but you can't afford good homeowners insurance. It's not like it's a lot more. It's like $3,000, dude. Like I paid $7,000. I'm like, yeah, well, you can have a turd. And they went broke. So for $10,000, you can have the gold standard, and I can make you happy.
Yeah.
And,
there you go.
you know, it's the same in health insurance. Fundamentally, it's just common sense, right?
Yep.
And so sell people what you would want.
Well,
I love it.
Let's have a return to common sense. So with that, and if you need a guy, hit up X Insurance. you know, if you got any kind of a weird policy that you can't find a box or a can of corn to fit it in, hit up our friends over at X Insurance.
Appreciate it, guys. Thanks.
Absolutely.
Yeah.
Thanks, Rick.